Joining me now is ERShares CEO Joel Shulman. Joel, great to see you.
Great to see you.
Thanks so much for being here. What are you expecting from Jay Powell today?
Well, I think if anything, he's going to indicate that he's going to have fewer rate cuts later in the year. I mean, the market right now is pricing in 62% likelihood of a rate cut by June. I don't see that happening. I think it's going to be fewer rate cuts, maybe 2 or even 1 later this year. Later this year. And I think we're going to see that we're going to have a less likely. I think he's going to indicate today that he's going to push it out. There's no incentive to cut the rates now, and certainly no incentive to cut them by June. I think we're going to see fewer and later in the year.
Adam, that's what you said earlier, right? Everything is basically evolving now as we get more data.
Well, it sure has. What a change. I mean, 4 or 5 months ago, people were talking about 3 rate cuts by June and another 3 in December for a total of 6. And now we're talking about kind of 1 and 1 for a total of 2. That's probably appropriate. And I'll actually give you credit, Maria, because you and I kind of disagreed about it for a while. You said, how can they possibly cut rates? I said, well, look, inflation went to 9%. And now it's down at 3, so it's only logical they should start cutting. And you said, well, I think the market got ahead of itself. And I think actually you were probably right.
Thank you. I just feel like, when you're looking at all the stimulus out there and you're looking at oil prices where they are, and you're also looking at the fact that it's an election year, 6 rate cut sounds wildly optimistic. We got data right now. Crossing, let's get to Cheryl Casoni with the ADP number right now.
So Cheryl. The ADP number, this is the private payroll data number. This came in hotter than expected. It came in at 184,000. The estimate was only for 148,000, and even that read, remember, last month was lower than expected. Well, they just revised their February number from 140 up to 155. So definitely kind of a shift here in what we're seeing as far as these job numbers go. But again, 184,000. Got the jobs report for March coming up on Friday. Again, that's 200,000 jobs expected for payrolls and 3.9% unemployment rate. But again, this data has been a little interesting, to put it mildly.
184,000 new jobs created according to ADP, Joel. That was better than expected. But does this indicate a bubbling up economy?
Well, the economy's strong. GDP's been strong all year. It's exceeded expectations. We've got 80 million baby boomers who have been retiring. They started a few years ago. We've got 4.3 million retiring per year. They're not going anywhere. Your article, your note earlier today talked about how individuals have to have $1.5 million to retire. They're taking longer to retire. That's going to keep the labor force in check. And as a result, we're going to see the numbers rising. And so we're going to see continuing heating up of our economy. We're seeing that, again, interest rates are going to rise as a result, and we're going to see fewer rate cuts.
What are you seeing at ERShares in terms of how people are allocating money right now?
Well, the first quarter was a quarter to make money, so the markets were way up. We were up 15%. Our index was up 25%. We had a big quarter, largely due to the AI. We know NVIDIA and Supermicro. I think people are going to be taking money off the table in Q2. Q2 is a period to hold on to the money, and I think Q3 is going to be a choppy period. I think the markets are going to come back in Q4 when we see 1 or possibly 2 rate cuts. They say 3. I don't see that happening, but I think we're going to have a period. Q1 and Q4 are going to be strong. Q2 is going to be choppy. It's already started off rough. I think we're going to see that the market's trying to hang on to whatever profits they had in Q1.
See, Adam, if he doesn't cut rates in June, then I don't think it happens until after the election. Because if he cuts rates in September, he's going to get highly criticized for being
trying
political,
to make Biden look good.
Trying to make Biden look good, keep him in the White House. So if we don't get one in June, I think it's off the table until after November or potentially 2025.
All right, but let me throw this out. Mr. Trump has already said that if he gets elected, Powell is out.
He told me that.
Yeah.
In my interview, he said he's not reappointing Jay Powell.
Right. So
then you really have it up in the air.
So, I mean, maybe Powell actually will try to, help Biden. Although, and I sort of say that tongue-in-cheek because I do think that Mr. Powell has shown tremendous I'll probably get some hate mail for this, but I would argue integrity in trying to address this from a logical, data-driven standpoint.
After telling us for months it was transitory.
Yeah, I know. But ultimately, he was right. It was just transitory wasn't quite as fast as we thought.
What's transitory? But when I asked President Trump about Jay Powell, here's what he said. Watch it. 4th, Joel, when President Trump said inflation will reignite because of oil. That's exactly how this is playing out.
Yeah, no, he called it right back then. And in fact, not many people in February were anticipating that inflation would pick up.
President Trump was.
Yeah, well, he called it right at that point. So,
Yeah.
and now I think you're seeing a lot more people on this bandwagon.
All right, and you just said it's going to be choppy rest of the year. Does that mean you want to put money to work in stocks, or you want to take to the sideline?
I think you want to. Q2 is a period to be conservative. I think Q2, right now we started off Q2. It started off the way it's going to end, I think, Q2. So I think it's going to be very choppy. We're going to see a lot of movement in money. I'd be in conservative stocks. I'd be cash flow, shorter duration for equities. Make sure that these are companies that have cash flow. They're expanding margins. So there are some picks. It's a stock picker's market. But I would not be taking big risk. Risk in Q1, which paid off. Risk in Q4,